Hey guys, welcome back to the channel. Today I'm going to be providing a long-term market analysis for Cardano. I'll be talking about some very key support resistance levels to watch for, my longer-term views, and also the Bitcoin ratio. So if you guys enjoy the content, please do consider leaving a like and subscribing. Also consider checking out our sponsors and partners. Over at ftx.us, you can sign up with the link in the description below and get a 5% discount on your exchange fees. Alright, so I'm going to start off here on the ADA USD pair on the weekly chart, and I want to talk about these moving averages first because that is probably the most important thing to watch for in the short term. So we've got these two moving averages here. The green one is the 21 EMA, the red one is the 20 SMA, and I like to think of these as a band of resistance when we're below this. So you can see that we actually had two rejections off this band back first in January of this year, and then also this next rejection right here in March. So we can see this is where the lower highs have been forming so far. This is where the resistance is. And currently these range from 60 all the way up to 65 cents. So that is more or less the level that I want to see reclaimed by Cardano. And in the event that we're moving back above these moving averages, reclaiming them and then testing them as support, that will really start to increase the probability that I believe the low is in place. But again, as of this moment, we still have yet to do that. This is still resistance until proven otherwise. And if we're just sticking with the current trend in place, which is this dominant downtrend really just beginning in August of 2021, what we would have here is a potential lower high forming somewhere around this region where we reject off these moving averages. And then you can see at the very least what we did in the past was retest the lows. So if you're not prepared for a move that brings us back down to retest the lows, I don't think you're doing yourself any favors, considering that that would just be a continuation of the current trend that we're already in. Alright, so now I want to talk about some very key horizontal support and resistance levels, and most notably, let's start here with the support level around 41 cents. So as you can see, the current lows are forming right off this region. It's a positive sign because historically, this was a major level of resistance. If we go all the way back to the 2018 bear market, this was the macro lower high where we rejected and then continued this bearish decline. You can also see that in February of 2021 on this uptrend, this was where we had a brief level consolidation, these two red candles sort of pausing on this uptrend, and then from there, when we broke above this level, we went on to new all-time highs. Now, there is a potential if the momentum is to continue, if we are to see yet another big rejection off of these moving averages, that we flip this into resistance. And I want to say that this is not my primary view, but there is a chance in the extreme event where, say, Bitcoin is losing $17,000, it's dragging the altcoins down with it, and Cardano actually loses this level, then I would look to the next longer term level of support around 17 cents. And again, that is much further down, so it's not my primary view. I think the bearish decline has definitely been severe enough in terms of what we should expect in terms of a normal bear market. But essentially, this is the next level of support, considering that this was the area where we had another macro lower high back in the 2018 bear market. This was a point of resistance and rejection back here in 2020, and then we had more consolidation later on, and eventually when we broke above it, we really kicked off this big leg up. And again, I think the probability that we hold this support level is greater than the probability that we're flipping it into resistance. But in terms of a longer term bottom, essentially what I want to see, whether that level is already in and it's at the 41 cent mark, or if we're coming back down, forming a bottom at this level much further down, what I want to see in terms of a longer term bottom is some sort of accumulation and sideways period. I want to see a base of support being developed where demand is really starting to step in, and I want to see a longer term period of oscillation, accumulation, and generally just trending sideways. Because typically when you go from a big bear market, you don't really just go back straight up into a bull market. You have to transition from the bearish decline into a neutral sideways territory, and then from there you can start to really trend back up, but it's not an immediate shift from bearish to bullish. And last cycle you had this low here in December of 2018 around 2.7 cents. Consider that we actually retested it in March of 2020, a year and a half later. And essentially what we did was we just consolidated and oscillated between this range, right? So we went back and forth between the highs and the lows, and eventually when we were ready to transition into that bull market, we broke above the highs, retested it as support, and then we started that uptrend. But consider that the bottom was not in, and then we just went off straight back to all-time highs. We had a long period of consolidation and oscillation, and obviously the current cycle does not have to repeat what it did in the past. But my point here is that you don't see a bottom in place that takes very little time to develop. You need to see a longer term accumulation phase where, again, you have more and more buyers starting to step in, demand is really starting to increase at the support levels, and you start to see that transition and really diminishing the bear market momentum. So whether the low is in today at 41 cents or if we're coming back down, breaking that level and forming a low a little bit lower down, my point here still is that even if we have a low from a price standpoint, we still have a long ways from a timing standpoint where I do think we need to see more consolidation and accumulation before starting that reversal back up to some of these higher valuations. All right, so now I want to talk about the Cardano Bitcoin ratio, which I think is a very important chart to look at because it's important to consider the opportunity cost with different cryptocurrencies. And if your altcoin can't outperform Bitcoin, then for me, I'd personally much rather hold Bitcoin considering it does tend to have lower risk associated with it. It's more time tested and proven by the market. So let's look here and just start by talking about this support level around 1700 Satoshis. Now, this is a very key level because again, that is where the current lows are forming off of. But also notice how this is a very key support resistance level from the prior cycles, where this was a macro lower low that we had back here in March of 2018. This was the level that we bounced back up into this macro lower high. And then essentially what we did was we fell below it, came back up, and then flipped it into resistance with this big rejection here in April 2019. And that eventually caused us to go back to these bear market lows, retesting this level that we had back in November of 2017. And then you can see that we had another move back up, retesting this here in the summer of 2020. We had the rejection and then a continuation lower. And then when we broke above it, retested as support, good to go, and then we continued higher. All right, so that is where the current low is off of right now, and it's important to see this level continue to hold, because if we're starting to break down from here and then continue to some of these lower valuations, then it will mean for me that Cardano is going to start continuing this longer term trend, which it is underperforming Bitcoin, and Bitcoin would have, say, a better return associated with it. So that's not something you want to see. You want to see a continuation of basically holding this level as support in the event of some sort of retest. Maybe we have a double bottom or even some sort of higher low. This is the level that we want to defend in terms of a longer term bullish stance against and relative to Bitcoin. Now also let's talk about the same moving averages, the 20 SMA, the 21 EMA. You can see with the Cardano Bitcoin chart, this is again going to be resistance. We saw this rejection back here in January and then another rejection here in April. And the good thing about the Cardano Bitcoin pair is that we've actually flipped these into support. You can see we're consolidating just above them, holding this level. So that's a great sign, and that might start to mean we could be potentially flipping these into support and then continuing on some sort of uptrend. So that's what I'm looking out for. I'm looking out for if we can start to reclaim some of these lower highs, this one back in March around 2,700 Satoshis, and then really start to outperform Bitcoin, which would really bring a lot of strength into Cardano USD, which is what I want to see personally moving forward throughout the long-term perspective. So I hope you guys did enjoy the content and the analysis. Once again, check out our sponsors and partners over at ftx.us. They're a great exchange. You can sign up with my promo code SNOWYCRYPTO and get a 5% discount on your exchange fees. So as always, I hope you guys enjoyed, and I will see you in the next one.